Taylor, I don't know if you heard this, but Neil Kashkari is out there saying this banking crisis actually might bring us closer to a recession. Folks at my channel, we're not surprised because I told them that 2 weeks ago, that weekend, that this is going to crush the consumer. But what I want to do here, Taylor, is really talk about what Neil is talking about and also kind of take it over to jobs, because I think a lot of people are shocked when a company announces $8, $9, $10, $15,000 layoffs, their stocks actually go up. I think people don't understand. So what do you think's going on? What did you see of Neil Kashkari first?
Yeah, so I agree with Neil Kashkari that this is absolutely going to compound the likelihood of a recession coming. I mean, Jerome Powell himself, head of the Fed chair, or the Fed chairman, said it himself last week. He said, when asked directly, will this increase the likelihood of a recession? He said, this takes the likelihood of a soft landing and brings it down dramatically. So he's saying openly, like, this is a restrictive economic scenario that this is going to cause to play out. So no doubt about it. And to your point, we've seen now tech layoffs for a couple months in a row, several months in a row, several quarters actually in a row now. And some of the stocks have responded in a way that people would not expect them to. So I'm happy to touch on that as well.
Yeah, I mean, we can go back to the very first one, Meta, which is a stock I happily jumped into. I was very open on this channel that I did, trading under $100. Basically, there was an open letter, Bill, I forget the Silicon Valley guy. One of the Silicon Valley guys wrote an open letter, basically saying, Mark, you're an idiot. Stop spending money like it's, water. And sure enough, the next week he announced the first layoffs, talked about efficiencies coming, and the stocks ripped. It's over $200 last time I checked. So again, layoffs are coming and stocks are going up.
The funny thing is simultaneously they're reporting bad earnings.
Yeah, so exactly.
Their earnings and their outlook is bad. So the earnings that have come due now over the past year are negative year over year. And this is technology at large. The NASDAQ is what I'll refer to here. Technology at large are seeing negative earnings reports versus last year, and they're giving negative forward guidance versus what was anticipated, and yet the stock prices are going up. Yeah, they've had this, kind of come to Jesus moment, and Facebook is, Meta is the easiest one to point at, because they were spending, I always say, like drunken sailors, and the amount of money that they were putting into this Meta build out in the future, which is not creating any sort of revenue stream at this point.
It's all burn.
It's all absurd. It's all burn. Exactly right. Billions of dollars, tens of billions of dollars on this. And eventually someone stepped up and said, guys, like, we can't see a light at the end of the tunnel. This works in 2021 when financing is free.
Yeah,
when you can paint a picture about what's to come in the future. But now that financing is no longer free and rates have come off of zero, you guys need to start being a little bit more fiscally prudent.
Yeah, it's very interesting. And again, job losses are coming, and it won't only be tech. It will eventually come. And again, I've shared my experience, having been one of those executives at the table with a spreadsheet going, I got to cut, pick a number, 23, 17, 50, whatever it was. And again, early in my career, I was an accountant who was making the adjustments on overhead and reserve requirements and all of the things. So again, when you talk about earnings per share, at least in tech companies, the largest operational cost is employees.
Right.
And if you, CEO, has to show meaningful, better performance, and oh, by the way, when you lay off, you get to do these things called reserves, which you get to call something else. We should expect significant layoffs, certainly the next 6 to 9 months. It's not over.
Yeah, and if you're a software engineer at 27 years old making 250 grand, like, that's the real numbers of what people are making in that industry. That is meaningful savings every cut that you can produce. And so, are we able to find efficiencies somewhere and able to take 2 jobs and make them into one? It's, I had a grad school professor, and he published this to us. He published it in a book and then presented it to us. And it was a very interesting thought. He said that we've done all of the statistical research, and the average employee gets work done 3 hours a day. So he goes, when a recession comes, you guys are working 3 hours a day. We know that. You're here for 8. So he's like, that's 2.5 jobs that we could take and reduce and still have the same work get done if that person is fearing the life of their job.
Yeah. And oh, by the way, we have these last 2 years where money is free. Actually, it's pretty well known in the Silicon Valley that there was a wave of hiring to actually take talent from others. There were people not working. We had TikTok accounts of Facebook and Google, product managers sitting in these little, taking naps during the day and stuff. It was disgusting. That's over.
Yep. And during this most recent round of layoffs for Google, they laid off 24 massage therapists.
Yeah,
which was also interesting. I didn't know that was a line item that created assets or revenue for them on their balance sheet. But apparently they keep people comfortable and make them earn more, right? That's what they say.
Taking some of the goodies away. The other thing to really talk about, and we may make this its own video, so we'll touch on it here. If we have time, we'll do a separate one. I think there's a general understanding, and I put this out on Twitter that weekend, so 2 weekends ago, that what was coming to the banking crisis, right? Banking crisis was real, but I could see the next couple of dominoes, and I have receipts to approve it. One is this is going to be liquidity draining, right? And essentially the capital markets have been shut for 2 weeks. There's not a lot getting done. So that happened. Second, what's going to happen after this is going to do Jerome's job for him.
Correct.
It's going to artificially raise the cost of capital. And some people have guessed as high as 1.5 base or 150 basis points. We have, I think, I want to say Neil, but I don't think it was him. Somebody talked about it might be 75 basis points. Either way, I don't know if Jerome was smiling, but maybe he's snickering in the background when he's alone. Like, damn it, this is going to beat inflation back for me. I don't have to do as much. What do you think?
Yeah, 100%. He said in his comments that this was equivalent to one extra rate hike. I think it's far more than that. Far more. Yeah, I said in a video the other day that it was 100 basis point increase, a full 1%.
I agree. That's the number I would say.
We could throw darts and say which one's right, which one's not. Who the heck knows at the end of the day? And nobody knows.
When do you think we'll know? Because again, in a month, we're going to start seeing numbers from this crisis, and they're going to be anemic.
Yep. Yeah, I think you're going to see the tightening of the belt across the banking industry and then across industries, at large. You're going to start to see more cracks form here. Like, this is what happens during the business cycle. As we have things get too hot, inflation gets away from us, you have to tame it. And how do you tame it? By raising rates. There's only one real solution there, and that drives us into a recession. Like, should not be a surprise. We know inflation got away from us. It was a function of all the stimulus during COVID. We knew we had to tame it. And now, are we surprised that a recession is going to be a product of this or a function of this? I'm not at all. History tells us this.
Yeah. You know what? We're gonna work. This has been a great wrap up. I want to get another topic on its own video that just jumped in my head. So before we do that, where can they find you? Because you do a lot of daily stuff that people have to watch.
Yeah, thanks so much. We do try to keep it current. So we're on Instagram and TikTok. Follow us at Life Goal Investments. There'll be 2 to 3 videos a day.
Awesome. 2 to 3 a day. I love when you're walking around the floor. That's awesome. People just must geek out with that. So thank you.
Appreciate